Welcome to the deep dive. We've got some really interesting analysis in front of us today. We're putting two absolute giants of the semiconductor industry head to head.
That's right. We're looking at ASML holding, the essential tool maker, and Taiwan Semiconductor Manufacturing Company, TSM, the world's biggest pure play foundry.
Exactly. And our mission here is to give you kind of high-level shortcut, really, to understanding the core investment thinking for each one. Based on these financial docs, the strategic plans we have, if you're a dedicated semiconductor investor, which one looks like the more compelling strategic bet right now? Is it the company controlling the key tech, the gatekeeper, or the one scaling up global production like nobody else?
Okay, let's dig in. But first, really important, a disclaimer for you listening. We're guiding you through these sources, earnings reports, analyst notes, company plans. But this is strictly, and I mean strictly, for informational and educational purposes.
Yeah, absolutely critical point.
We are not giving financial advice. This isn't investment advice. Please, always do your own homework, your own due diligence.
Definitely. Okay, with that important note covered, let's get into it. This comparison, ASML and TSM, it's fascinating because they're in such different spots in the supply chain, but totally connected.
Symbiotic, really, yet their business models, their moats, are fundamentally different.
Right. So let's start there. What makes each one so indispensable, their core moats?
Okay, ASML. Their moat is just, it's almost legendary, right? They have a near total monopoly, not just in lithography generally, but specifically in extreme ultraviolet EUV systems.
The tech you absolutely need for the most advanced chips.
Precisely. AI, top-tier smartphones, massive data centers, they all rely on EUV. And the science, the R&D investment over decades, it makes the barrier to entry just incredibly high. Astronomical, really.
So anyone wanting to make cutting-edge chips basically has to pay ASML's toll. It's this technological lock-in that kind of secures their revenue almost no matter who wins the foundry race itself.
You've got it. Now, TSM, their moat isn't a single piece of tech like EUV. It's about scale, execution perfection, and deep, deep process expertise. They are the world's leading pure-play foundry for a reason.
Their dominance comes from just being able to reliably churn out massive volumes of the most advanced chips, especially for things like AI hardware.
Yes, it's operational excellence and tech leadership, but specifically in volume production.
And speaking of scale, we should probably mention the market caps here, just to frame it. TSM is huge, valued at around $1.55 trillion. It reflects that role as the world's main advanced chip factory.
Yeah, it's staggering.
And ASML, the supplier making TSM's advanced work possible, is also massive but smaller, around $395.75 billion. Big difference.
Okay, so we get the basic setup. How are they doing right now financially?
Well, looking at recent performance, both are strong, definitely. But TSM's numbers really jump out, especially with the current AI boom. They had a stellar Q2 2025. Revenue hit $30.1 billion, and get this, EPS was up over 60% year over year. That's huge. Gross margin, also very strong at 58.6%. Wow, 60% EPS growth.
Okay, and ASML?
ASML's Q3 2025 was solid too. Net sales were $7.5 billion, net income $2.1 billion. Good numbers. Gross margin was 51.6%, respectable. But the key thing for ASML, maybe the more important forward-looking number, was their net bookings. $5.4 billion in total orders.
And a big chunk of that was the EUV, right?
Exactly. $3.6 billion just for EUV systems. That tells you the demand for the most advanced manufacturing capacity is still incredibly strong and reliant on their machines. It's a signal about the long term.
Okay, so strong bookings for ASML, stellar growth for TSM. What about the outlook for the rest of 2025? Here's where the difference really shows. TSM actually raised its full-year revenue growth forecast significantly. They're now expecting around 30% growth in US dollar terms for 2025.
30%, that's massive.
Yeah.
Driven by AI and HPC, I assume.
Almost entirely. That demand is just relentless. Now, ASML, they also benefit from this trend, obviously, but their forecast is different. They expect total net sales growth for 2025 to be around 15%.
Okay, wait. So TSM is projecting basically double the revenue growth rate of ASML for this year.
That's right.
But when we look at valuations, ASML actually trades at a higher premium. Its forward PE is, what, 32.23? And the stock price is well above its fair value estimate.
Correct. ASML is around $229 versus an estimated fair value of $825.62.
And TSM, also above fair value, but its forward PE is lower at $27.99.
TSM is trading around $295 with a fair value estimate near $265.78. So yes, also a premium, but less than ASML.
So what gives? Why is the market paying a higher multiple for ASML despite the much lower near-term growth projection compared to TSM was being priced in there?
Ah, that's the key question, isn't it? That premium for ASML is essentially the market paying for that technological lock-in, that near monopoly status, and the perceived stability that comes with it.
Stability, how so?
Well, think about it. TSM faces real competition, right? Samsung, potentially Intel Foundry. But ASML, for EUV, there's just no real alternative right now.
So their earnings feel more guaranteed.
Exactly.
Yeah.
The market believes ASML's earnings stream is incredibly secure because their customers have to buy from them for the cutting edge. Plus, importantly, ASML's business model requires significantly less capital expenditure, less CapEx, than TSM's massive foundry build-outs.
The CapEx difference, that's a big one.
It's huge. So you're paying that higher multiple for ASML because you're essentially buying a business model that seems structurally safer, more insulated from competition, and frankly, from the massive operational risks of building and running billion-dollar fabs, even if the immediate growth percentage is lower.
Right, okay, that makes sense. It's like an irreplaceability premium baked into the stock price.
Got it.
Let's shift then to strategy and innovation. This is where the long-term story really unfolds.
Definitely. And ASML isn't standing still. They're pushing forward with their next-gen High NA EUV tools. They mentioned over 300,000 wafers already processed using that tech, which is significant progress.
But the really interesting strategic play seems to be their AI integration, that Mistral AI investment.
Absolutely critical. That $1.3 billion investment for an 11% stake in Mistral AI, that's not just financial, it's deeply operational.
How so?
The goal is to leverage advanced AI to seriously improve the performance, the precision, the yield of their lithography machines, and maybe even more importantly, to speed up their own product development cycles. Lithography is becoming an AI optimization problem as much as a physics one.
Wow. So AI isn't just a buzzword here. It's core to their future tech development,
Right.
improving the tools themselves.
Precisely. Meanwhile, TSM's roadmap, it's all about pushing the process nodes forward and tackling the power challenge. They seem firmly on track with N2, their 2-nanometer process. Volume production expected in the second half of 2025.
And beyond into.
They're already talking N2P and then the A16 node. And A16 includes something called superpower rail, or SPR.
Okay, SPR, why is that significant? Sounds technical.
It is technical, but strategically vital. SPR basically moves the power delivery network to the back of the silicon wafer. It's a fundamental design shift
Why do that?
to reduce electrical resistance, boost chip performance, and crucially, cut down on power consumption. For the kind of high-performance AI chips TSM specializes in, power and heat are massive, massive problems.
So if TSM can deliver better power efficiency with SPR compared to rivals like Intel or Samsung,
They potentially solidify their lead for the most valuable, power-hungry chips. It's
Wow.
a major differentiator if they execute it well.
okay, fascinating strategies. But every strategy has risks. What are the big headwinds for each company? For ASML, it seems geopolitical, right? Especially concerning China.
Yes, that's the clearest risk outlined. The sources say ASML expects a significant drop in sales to Chinese customers starting in 2026. This will mainly hit their older deep ultraviolet, or DUV, business because of export restrictions.
A direct revenue hit.
For sure, in that
Sure,
specific
okay.
segment. However, and this is important, ASML management also stated they expect overall net sales in 2026 will not fall below 2025 levels. Because accelerating demand for their high-end EUV systems in other parts of the world is expected to compensate for the DUV decline in China. It sort of reinforces the strength of that EUV moat. It buffers against geopolitical issues impacting the older tech.
Okay, so a DUV hit, but EUV strength hopefully offsets it overall. What about TSM's risks? Seems more operational.
Definitely more operational and capital intensive. Just look at the CapEx number again. They're sticking to a forecast between $38 billion and $42 billion for 2025 alone. That is an immense amount of spending that requires absolutely flawless execution.
And building fabs overseas isn't easy or cheap.
Exactly. They're forecasting margin dilution, a hit to their profit margins of about 2% to 4% annually. Why? Specifically because of the high costs of ramping up these new fabs outside Taiwan, like in Arizona and Japan.
Right, building in new regions, training workforces, supply chains, it all adds cost and complexity. So the big question is, can they keep spending $40 billion a year and manage these overseas ramp-ups and still hit their long-term gross margin target of 53% or higher?
That is the core execution risk you take on with TSM. They believe their technology leadership and pricing power will let them do it, but it's a huge challenge. And don't forget the macro picture either.
What else?
Foreign exchange. The Taiwan dollar has been strong against the US dollar. That currency movement creates a headwind, making their reported revenues and profits look lower when converted back to US dollars. So they're juggling capex, overseas costs, and FX.
A lot of moving parts and potential pitfalls there. Okay,
Yeah.
let's try to synthesize this. We've covered their moats, performance, growth, valuations, strategy, risks. What does it all mean for you, the listener, trying to weigh these two semiconductor titans?
Yeah, boiling it down, you have two incredibly strong, essential companies, but with really different flavors of risk and reward.
How would you characterize the choice?
With ASML, you're buying that technological indispensability, the high switching costs. It's the ultimate pick and shovel play for the advanced chip industry. Their 2030 revenue targets, aiming for 44 to 60 billion, show huge confidence.
And the risk there?
The main risks are that geopolitical turbulence, particularly in the DUV market, and frankly, paying that very high valuation premium upfront. You're betting on continued perfection and dominance.
Okay. And TSM?
TSM offers direct exposure to that explosive AI-driven growth. That 30% near-term projection is compelling. You're betting on the sheer volume and speed of the most advanced chip production globally.
The risk profile?
It's much more about execution. Can they handle that enormous capex efficiently? Can they successfully manage the margin pressures from building factories overseas? Can they stay ahead of Samsung and Intel technologically? It's less about market access, more about operational mastery.
So it really comes down to your personal risk tolerance, doesn't it?
Absolutely. Both companies are riding the massive AI and digitalization waves. ASML gives you the unique, high-margin tech provider. TSM gives you the scale and speed engine of the whole process. Are you more comfortable accepting ASML's high price tag for its seemingly unbreachable moat, or TSM's faster growth potential despite the significant operational hurdles?
A fantastic summary. Both indispensable, but in very different ways. One mastering the tools, the other mastering the factory floor at incredible scale. All right, let's wrap up with a final thought for you to consider. Given ASML's big strategic investment in Mistral AI, that 11% stake, how quickly could embedding sophisticated AI directly into their lithography tools change the game?
Interesting angle.
Could it not only boost the performance of current machines, but actually accelerate the entire industry's roadmap? Could AI help them solve the physics problems faster, pushing technological advancements ahead of schedule? And if so, how does that rapid acceleration change the long-term competitive landscape for both ASML and TSM? Something to think about. Thank you so much for joining us for this deep dive. If you found this shortcut useful for understanding the strategic landscape between ASML and TSM, do us a favor. Please subscribe to the channel and make sure you hit that bell icon. It really helps support us and ensures you won't miss our next analysis. We appreciate you tuning in.